3, 2, 1. Welcome to the FOREX Trading Show. FOREX Trading Live. Every weekday morning. Real trades. Real profits. Zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Good morning, fellow Forex traders. It is Monday, September 9th. Live Forex trading results. That's where I come from. Results. We don't bullshit fake analyze charts. We don't look back at historical data and go, well, if you entered here, you'd be rich. We are looking at an actual free trade signal that I send out, NZD USD, acting a little weird. Because we went into the trade, it went into profit, looked like it was going to take profit, and then the market moved against. But my system likes that. So that is not a bad thing. Base bid on this free signal account, 0.10, $1 per pip lot size. It's at about a $40 drawdown right now. This is going to be a great trade. The reason I say that is we are, 1, 2, 3, 4, 5 trades into this. Last two are profitable, headed towards take profit. There's actually more trades from my main algorithm and my main system on NZD USD, but we are in the last 5. So this is pretty good. I've got a large account myself, and I just manually jumped in to this NZD USD buy trade at a pretty hefty lot size. I'm not saying that I'm some sort of prophet and I know exactly what's going to happen in the future. However, typically, given what's going on with the market lately and my system, I just get this feeling and sense that this is a good time to get in. One of the things I'm looking at, and again, I'm not analyzing the charts and forecasting. We're in a trade. So I'm going to tell you where I think the market is going to move. If you look at this is basically, you can't see this wick right here, but this is a FMV, fair market value gap. This is also considered just, a gap where this huge amount of downturn happened, and the price at some point is going to need to come back up and fill this area. Why? Because whoever moved it that much spent hundreds of millions, if not billions of dollars to move it. Okay? Maybe a conglomeration of banks and hedge funds got together. But they are in drawdown. Potentially tens of millions of dollars worth of drawdown, maybe more. And they're going to need to move it back there. Is this the move that's going to make it happen and hit our TP? I don't know. Not saying I do know. But I do understand these general patterns. I hate to use that word, but I'll tell you this. I don't look for patterns before the trade. I look for patterns after my algorithm has entered the trade. Completely different than what other people are doing on the internet. We are looking at the free signal here. I am going to talk today about a recommendation. You do whatever the hell you want. I'm going to come at it from, it's a recommendation more so to myself. I'll tell you what I'm doing. I'm trading just a little bit differently in this market. And we'll get into it when we go look at, I'll get into it wherever it fits here. But I'm going to be giving you a recommendation, but more so I'll say I'm talking to myself and I'm recommending to myself to do this. And I've already set up to do it. Basically, what am I doing? I'm using my algorithm to trade in a very specific way. A very specific way that you guys have all heard of, and it's all available to everybody. I get a sense that if I come out and say this, everybody's going to rush to it. That's perfectly fine. I think it's a good recommendation, as if I'm talking to myself. Hey, Terry, this is probably, given what's been going on in the market and given, the current market conditions, how everything changed after, all the kids went back to school and all the traders are back, working at the big banks and the hedge funds, so on and so forth. So we'll get into that, but I'm just trying to think of the best place to get into it. Let's move on and look at some history here. Nothing closed as far as the free signal overnight. For the last week, we'll call it 5 to 7 trading days, $922.47. That's not a bad amount from the free signal. Now, if you jump up to the month, look at what it is, $7,676.27 in the total net profit down here. And that's starting out with a base lot size of 0.10. And we can scroll back through this, which we will here. So let's just look at what the highest lot size was. And I think there was a pretty high one on one of these, like maybe AUD JPY, not this trade, but so 0.7. And I'm just going to scroll through here. Let's scroll, and I'm just that I think it was that GBP USD. It was a 3.60 lot size. I get it. That's pretty outrageous, right? I'm saying this because this is a big point and getting close to a segue into what I'm going to recommend to myself, how I use the system in the next weeks, months, moving forward. And everything I suggest to you is an idea and a test. Nothing is, the definitive data shows that this is going to make you $10 million more than you normally would. No, I'm not saying that. So I think it was that 3.6. Let's erase that and just look back. So, and as I look at the rest of the lot sizes, so GBP USD ran the hell away, as you can see, right? But that was about it. And what's interesting is GBP USD must have went pretty deep on those trades, but we didn't obviously take them all. There was quite a few trades there. I mean, look how profitable that was. So if your account can handle that, great. The thing you have to remember is your average account probably can't handle that. However, here comes a piece of my recommendation is continuing to practice on a demo account. And I think this is probably a good segue. Continuing to practice on a demo account where you bid a hefty lot size, right? A beginning lot size. Sometimes beginning lot sizes can always seem low, but you have to look at the potential of it doing this here, going to a 3.60, $36 lot size, $36 per pip. You have to plan for that because pairs will push and go against. They absolutely will. And what you should do, as far as what I was saying on a practice account, is I'm going to give you a leg up on your practice and a leg up on what I'm recommending to myself in the next few months of trading. Set up a practice account. If you're a subscriber, this is going to be easy for you. If you're not a subscriber, you probably should be, so you can do this. What I want you to do is I want you to set up a demo account and attach a feed that I have called the One Profitable Pair feed. We will talk about that extensively today. And I want you to bid what might be considered 8-10 trades deep, a pretty high lot size. Not starting out. That could mean that you're at a 0.01 because you have a smaller account. It could mean that you're at a 0.10. That's where I'm going to be. I'm going to share with you guys and show you a test account that I was using and how I'm going to manipulate it. And also, just so you can kind of see it playing out in real time on a small account, like a $1,000 account. There's so many layers to this. I'm just trying to think. We probably need to go look at probably need to go look at an account. Let's stop looking at this. So we've got the free trade. NZD USD buy. Let me go to the pause. Give me a second on my end. I'm going to pull up something. I need to pull up my account list. And we are going to dig into some stuff. So that was the free signal. I'm going to go look at... In fact, I may spend more time on this one profitable pair feed concept than I will looking at all of the different feeds today, because I'm having a lot of different ideas about this. Let me think of what account I want to pull up here and show you. You know what? I'm going to do this one. Let's just dive right into this. Give me a second. I'll pull it up here and explain to you what I'm doing. Let me share this. So, a little bit of back story history on this. 3 weeks ago, I said, hey guys, in the live chat, give me a random currency pair, give me a random entry. So someone chose USD and USD JPY, and someone said buy. So I've been dicking around with this trade, just kind of showing you guys. I've hedged this trade at least 3 times. I did another hedge last night because it's just started. This thing has just went sideways and a little bit down. Sideways and a little bit down. And obviously we're in a buy here. So it closed out. The price moved back up towards my buy trade. And I had a sell here, and it took me out break even, roughly. Okay. $7 net profit. And if we go back and look at this on the chart, this is the 4 hour. I mean, just absolutely sideways. It had some push down, absolutely sideways, and it popped back up enough to, somewhere in this area to take out my hedge. And I started to realize this. Again, this was intended to show you guys how to hedge and for us to have a continual account that we are trading and or hedging on. We ended up getting into the shittiest trade ever. Okay. USD JPY, a pretty good mover, hasn't done anything but go sideways. Look at this. This is the daily. I think we did a buy. Well, yeah, we did a buy somewhere in here, and look what it's done. Nothing. She goes sideways, right? So this has turned into kind of a shitty long-term 3-week trade that's not teaching anybody anything. And that's going to happen when you do what we did. We picked a random currency pair and a random direction, and ended up picking one that's not a great learning experience. So here's what I decided to do. What would have been a better learning experience? And then I started to look at the data and go, wow, wait, look at the numbers on this. What I'm going to recommend to you, I don't have as much verbal data to give you. I've looked at it, and I could probably spend an hour showing you the data that I've looked at. But what I've looked at is I've looked at my custom feed, my automated feed, which is called one profitable pair. It's pretty descriptive. I have a 22 pair algorithm that mathematically does not lose. It always ends in a net profit, assuming you've bid properly on that first trade, expecting that it could do what that GBP USD trade did. The one nice thing about my system, there's a lot of nice things, is that the entry direction is always right. Based off of the mathematics. The entry direction is always right. So in this particular case, I got to looking, and right now, USD JPY in my main algorithm is in a buy trade. I'm like, okay, great. However, it's, we're looking at the day chart here. Our take profit is right here on the current trade. So I'm like, it's not intended to move, back to this area. Maybe it'll push farther away. Maybe that's really why my system enters anyway. Maybe it'll push farther away, and eventually I can get out of this trade. But let's ignore this trade. It's a shit trade. The market's going sideways, and it's not giving me a good example of being able to show you entry and hedge when needed. This probably needs to be hedged, but I'm over it, right? I've hedged 3 times. It's moved away, protected the account, come back. And I think, we hedged when we were $120 drawdown, then we hedged when we were about $250 drawdown. Now we're at $400 drawdown, and I'm just like fucking over it. However, from adversity comes opportunity. And here's the opportunity. I'll just say this out front, and I'll tell you that I have enough data to back this up that I'm not necessarily going to spend the time sharing with you. I believe the best place to be at any given time, I don't want to lean too much on saying it right now, but as I look at the data and the concept, and I've been trading this algorithm for a long, long time now, over 3 years, I believe the best place to be is the one profitable pair feed at a heavier lot size than you might normally bid. Okay, so I'll give you an example. This is a $928.85 account. Absolute test account. Okay. I'm going to, and I already set it up, to accept the one profitable pair feed, the OPP feed, at a 0.10 lot size. And I'm going to use it in two different ways. One is to show you how profitable it can be focusing and trading one pair at a time at a heavier lot size than you might normally bid. So that means you're going to be able to bid, you're going to be able to make a little bit more potentially. But here's one of the big reasons I'm moving towards this in my own accounts right now, right? Shit changes. Typically when you test something, you test it for a few weeks or a month, and you go, you know what, I don't necessarily like it. A lot of it has to do with market conditions. Right now, it seems like the feed that I've been trading, I have a feed called the 10 pip hybrid. It is typically 3 or 4 currency pairs pulled from the total of 22 of my algorithm, and it trades those. And for whatever reason, luck of the draw probably, whatever group we've gotten into lately on the 10 pip hybrid, it just seems to stall there, and it just sits there. Yet I watch the full algorithm, and it's like ding, 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 enter profit, enter profit. So you get this thing called FOMO, fear of missing out. Now I'm not saying that I'm feeling that, but from that concept is that's what comes about. So here's the deal. If you always have to have the skill set of hedging, if a trade runs away from you. Here's a problem with trading the entire algorithm and getting 4, 5, 6 pairs that all need to be hedged. It's overwhelming. It is a lot less overwhelming for you to trade one currency pair at a time. And again, I'm talking about from my main algorithm and my feed. Everybody has access to this feed, the one profitable pair feed. If you're gonna bid heavy, most people do, I do, the skill set that I have that you may or may not have is the ability for me to stop it from bleeding too far, because a currency pair like that GBP USD we saw runs away on. It's going to happen to you. I don't care what feed, I don't care how little you bid, you're going to get something that runs away from you, and have to have that skill set of hedging. So if I'm going to have to do that, why don't I trade the one profitable pair feed at a heavier lot size than I might normally? In this case, $1,000 account, I put my base bid. I'm just going to go ahead and kind of trade out of this USD JPY. But what I've done is I'm sending my automated one profitable pair feed trades to this particular account at a 0.10 lot size. And if I have to hedge, I'm at least hedging from a trade in my algorithm that I know was entered in the right direction, and the algorithm is giving me the mathematics. It's given me, if I need to increase my lot size, it's already doing that. It's updating the take profit. So right now we did this manually, and the amount of time, like I'm so over manual, I've been over manual trading for over 3 years, right? That's why I created and sought out this algorithm. But even this, as I glance at this, I'm like, this is just, 3 weeks we've been in this trade. Look at the date here. We entered on the 19th of August. Check this out. We entered on the 19th of August. God damn it, quit touching that. My thumb keeps touching the screen. We entered here, and we are currently, we are here and we entered up here, right? That's 1 week, 2 weeks, 3 weeks. We're going on the 4th week of just sitting there in this absolutely sideways movement and sideways market. So I'm done with that. I know I'm jumping around here. Let me see. What is my definitive? What am I really saying? Number one, it's easier to manage one currency pair at a time. In this particular case, we're going to be in 2 because I did this manual, but we're going to get an automated trade that pops in here at a 0.10 lot size. And yeah, it's going to smack my margin level percent up here. It's going to knock it way the hell down. But the idea is to slowly trade out of this and maybe, obviously I know my algorithm wins. So here's what will happen. This is more of a feeling. I've got the data. I've looked at it. It seems to be more profitable to trade one pair at a time in the current market to fruition. One pair at a time to net profit until it takes profit, and then the next pair. Because here's the thing about that. Given the current weird-ass market conditions where you go into a trade and it goes sideways, trading 22 currency pairs, if you go look at the overall algorithm, in fact, let's pause the screen. Let's pull up the overall algorithm so I can make my point maybe a little bit better here. Let's look at this. I'm going to share it on the screen. You're welcome. So here's the overall algorithm. This is my premium signals monitoring account. So this is all 22 currency pairs that the algo trades. I'm not saying it's in, trading all 22 pairs right now. It's not. It's in about 2.5 dozen trades, right? So if you look at the history just for the day, that's a decent amount of volume so far, bidding 0.10, okay? And that's on the entire algorithm. If you go look at the one profitable pair feed, which we're going to jump to next, notice that the premium signals monitoring account is at 0.10 lot size. I know I'm using a lot of words here. Work with me. Let me jump over to this, the one profitable pair feed. I believe it is this. Let me double check. Yes, it is. Interestingly enough, just by luck of the draw, and I'll share this with you, the one profitable pair feed is also trading the exact same currency pair. It is the exact same trade sequence as the free signal. Just luck of the draw, right? It wasn't designed that way. So that's what's playing out right now. In fact, it's in a few more trades. But I want you to look at, and again, this is the feed itself. The feed comes out at 0.01 lot size. I want you to look at the history here. So nothing is closed overnight. But for the week, $119.21. That's at a 0.01 lot size. That's pretty goddamn good. And what, you can scale it up from there. I mean, what's 10 times 119, right? If you did, it's what, $1,200? Pretty close, right? So what did I say? What was our bid? We're doing, so 10 times, so $1,200. So had I been trading the one profitable pair feed at a 0.10 lot size, and let's kind of ignore the account size at this point, because if you're a professional trader like me, and you understand how to hedge when it's gone too far, it's so much easier to hedge and manage against the algorithm because you know it's going to win, as opposed to that test I was doing when we did USD JPY buy random trade and it went freaking sideways. Like, that's typically not going to happen with my I'm not going to say it's not going to happen. It happens differently with my automated algorithm. The automated algorithm would have given me a definitive direction. It would have given me a definitive take profit, and I could hedge inside of that to protect the account, which you'll see me actually do, if I have to. Why would I have to? Because I've bid too much on my trades. 9 out of 10 trades can handle a heavy bid. Once in a while you get that, like that runaway trade. And there's no rhyme or reason on these runaway trades. There's no rhyme or reason. And I don't want to call it a runaway trade. It's literally a trade that the banks and the hedge funds have decided to just dump a bunch of money into and send it farther away from the median price than it normally would go. And there's a lot of intent behind that. They intended, they see there's a lot of people trading in that direction, so they take it the opposite way, take out everybody's stops. That's how they make money. They take your money. The big banks make money by taking your money. Okay? So anyway, I started looking at this going, all right, of all the layers I've given you, another reason to trade the one profitable pair feed is simply your fucking sanity. It's trading one pair. If you bid too much, hedge, protect the account, let it come back, get out at break even. You bid a little bit too much, if it got that dangerous, bring your bid back. And there will be a happy medium. You're not, even if you bid the absolute minimum on an account, you're going to get into a trade that runs away. You just can't. So you hedge, you protect your account, you hedge, you play it out. The nice thing about it is you're only playing one side of the trade. The algorithm's trading. The algorithm chose the right direction. The algorithm's adding trades if it needs to. The algorithm's increasing its lot size if it needs to. Not exponentially. It's increasing it to bring the take profit closer. And all you have to do is, if you bid too much, go ahead and hedge, protect it. You know it's going in the direction that my algorithm chose. You know that if AUD/JPY does a buy trade, that is the direction that it's going to go. The take profit is going to go in the buy direction. It's just going to happen. It's a mathematical probability. It's a mathematical fact. Because we trade mathematically, not necessarily directionally. Pretty simple as that. So I think I've covered all of the reasons why I'm going to do that. There's just so many layers as to why. And I'm really unhappy with what the market has been delivering to us on my conservative feed, which is the 10 pip hybrid. Because we just get into these groups and it just sits there. It just sits there. In fact, let's go look at, I'll actually share the 10 pip hybrid with you. Let's go look at my sample account. And this will give me a little bit more fuel to kind of show you what's going on here. So give me a second. I'm looking at something here. So what is today? The 9th? Yeah, so this is just an example. Okay. Let me share this with you. So this is the 10 pip hybrid feed. It is trading a group of 3 pairs right now. AUD/CAD, Euro Chief, and NZD/JPY. And they're just all sideways. Look at what AUD/CAD has done. This is going absolutely nowhere. And if you look at the date on this, and this is my 10 pip hybrid feed, you can see it right here. The entry on this AUD/CAD was on the 4th. Okay, that's not that long ago. I get it. But it was last week. So we've been in it 1, 2, 3, 4 days, 5 days, right? Like, it's just freaking sideways. All of the pairs are pretty much that. However, if you back out and you do the one profitable pair feed, I believe from the data, from my gut feeling, is it's going to feel a little faster given the current market conditions. Because here's the deal. The algorithm, when it takes profit on a pair, it's literally just looking for the next pair to enter. The moment it enters, you take it. So you're always in a trade. You're always in one currency pair at a time. It just gives you more focus, less stress. If you have to hedge, you're only hedging one pair. You will feel like, and there will be more volume, because a lot of times if you're just closing out a currency pair and it's looking for the next one, it'll either jump into the later trade in a sequence. Like you could have a sequence of 5 pairs, 5 trades on a pair, and the AI closes from the one profitable pair feed, and then it sees trade number 5. There's 5 trades on NZD USD, let's say. And trade number 6 goes, and then from trade 6 it goes into take profit. All you'll see is trade 6, all blue, take profit, move on to the next one. And I feel like the one profitable pair feed is going to give me, potentially you, if you want to take the risk, a little bit more volume, a little bit less stress. And in the current market, one of the things I'm going to do in the background, you don't have to mess around with this. Let's go back to the trades here. One of the things I'm going to do in the background is, let's say we're trading the one profitable pair feed and we're in NZD JPY. And I see AUD CAD going ape shit. Ding, 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 going against, going against, going against, going against. I'll just exclude it from the one profitable pair feed. Or I might go, you know what? This thing is at its top. Go ahead and accept that one trade from a 20 trade sequence in one pair. And imagine how profitable that would be. Typically, I'd avoid it because here's the problem. I don't know what your bid is. And if I'm giving you the 20th trade in a sequence, it's probably an overbid for you. However, it's going to happen. Can't control everything. So you need to learn to hedge and protect that account. And we'll talk more about it, but I'm going to use that $926 demo account to accept the one profitable pair feed. I'm going to accept it at a 0.10 lot size. I'm going to use it to do literally 90% of the work for me. And if I have to hedge, I'll go in and hedge, protect it, get out of the hedge. If you've seen me setting the hedge trades before, and I'll set the hedge, then I'll set the stop loss a little bit into profit on that hedge. So when it comes back, takes me out a break even, heads back in the direction. And the difference between us using a random pair and using my algorithm is if we use a random pair, we just don't know, like it was an absolute random guess. We know that if we're using trades from my algorithm, we are in the right entry direction for where the mathematics are going to take us to a net profit. Does that make sense? I know I threw a lot of data at you right there, but given this current market, I feel like I'm going to move probably all of my accounts to the one profitable pair feed because we've got craziness going on. The election coming up. Who knows what's going on? We had like no news today, no high impact news tomorrow, but I think Wednesday, let's go look at it. I think Wednesday, all of a sudden, I always click the wrong damn thing. Wednesday, all of a sudden, let me pause something here so I don't share anything inappropriately. Here it is. So you see here today, September 9th, zero news, zero high impact news. If I click the next, so tomorrow, 2 a.m. British pound, 8:10 a.m. Canadian dollar, and then I think it's this one, yeah. So on the 11th, which is Wednesday, you got at 8:30 a.m. this pretty high impact USD news, core CPI type of thing. That's going to move the market. That also allows me in the background as the puppet master to say, do I want to be jumping into any USD trades? I don't know, right? So given the fact that I can manipulate the back end system a little bit, that doesn't mean that and the luck of the draw always happens. That doesn't mean that we're not going to jump into the very first trade of a sequence that ends up 30 trades deep. But along the way, if you're trading the same thing I'm trading, you can hedge at the same time I do. You can deal with it and watch. I think this could be pretty impressive. Now, you know that demo account that we're trading, $926. there's like a $400 drawdown on that USD JPY. I'm just gonna eventually get out. Hopefully it doesn't ruin my sequence, but I'm just gonna start trading. We'll get the hell out of that trade eventually. We'll just get out at break even. And I think trading the one profitable pair feed on a $1,000 account at a 0.10 lot size, especially if you do it, start out with demo and copy my feed, I think it could be extremely profitable. Because when would I ever suggest that you bid 0.10 on a $1,000 account? Never. I would never suggest you do that. But it's going to be a good test moving forward because it's both sides. It's my automated algorithm doing 90% of the work, the entries, the direction, the take profit, the increase of lot size, and then all I'm doing is literally hedging to protect because I know I already overbid a little bit. And I think it could be extremely profitable doing that. I don't think there's much more I can say about it other than, hey, let's just do it. Let me come back to the account here. In fact, before I do that, see, that was Wednesday. Let's look at Thursday. Looks like quite a bit of news on Thursday. Euro at 8.15. Thursday again, more core CPI. So that's going to be some serious. And then Euro again, 8.40. That's yeah. Thursday is going to be pretty heavy news day. Let's see what's going on Friday here. No news on Friday. No high impact news reported. Doesn't mean things won't move, so on and so forth. But so it looks like Wednesday, Thursday this week. Yeah, going to get pretty crazy. So what one was? So this is the 10 pip hybrid right now. But look at it. It's sitting here in 3 currency pairs, sideways for a week, 5 days. No closure. But yet, if you look at the overall algorithm, we've got ding, 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 closures. So if you were trading just the OPP, the one profitable pair feed, you'd probably have a little bit more volume and, get your dopamine hit from this. Now, for the week, $1,955.28. I'm not saying this isn't bad. I'm not saying that's bad. This is good, right? If you look at for the month, 24,000. That's because we had some big trades that went deep. I had some trades that went deep and ended up being big because when they go really, really deep, look at this, 4.0 lot size. Now that's with a base 1.0 lot size, so that's not that much higher, right? It starts out at $10 lot size. We went to a $40 lot size. Not that big of a deal. I am bidding an excessive, massive amount on this sample account, right? More so to show you, ultimately what's possible. So in this current market, I am currently moving to my automated feed, which is the one profitable pair feed. And I'm moving that direction. I gave you some of the data points, some of the ideas. But as I look at the data and as I've looked at it over the last months, I was like, this OPP feed, the one profitable pair feed, is just so many more advantages to it right now. That doesn't mean it's not going to get dangerous and we end up trading in that one pair. The algorithm picks that one pair that was trade number 1 in a sequence of 30. You can't avoid that. I wish we could. I've tried a lot of different ways to avoid it. You can't. However, you are avoiding 95% of the runaway trades just by trading one currency pair. Just kind of got me thinking. I was watching a video on YouTube the other night where this guy says, pick a pair and trade it. And I completely agree with that. Back in the day when I was manually trading, it was like, pick your favorite pair. Mine was GBP NZD. That was just my pair. And you get a feel for that pair, and you all you do is think about that pair. All you do is look at news related to that pair. So I'm not saying that is a piece of the OPP feed or the one profitable pair feed, but conceptually it's there. You're trading one pair at a time. So do what you want, move where you will. If you don't want to change your accounts and start copying different stuff, great, it doesn't matter to me. You'll at least get to watch how profitable it can be even on a small account like the $926 account that we're using as a sample. And if that random USD JPY trade that's $300-400 drawdown right now. If that wrecks the account, whatever, we'll start over, right? Because I think it's a better direction to go to have my automated algorithm pulling in the trades, and then all I have to do is manage the hedge if it goes too far and I've bid too much at the same time, right? Derek says, could the time of the year be the reason why it seems everything is going sideways or uncertain? You know, there's no way. I will never, ever answer that question because I don't know. I don't care. All I can say is here's what it's actually doing. Here's how it's felt in the last 90 days. Here's how it feels right now. I mean, imagine me speculating one thing. Listen, I'm an idiot. I don't know. You don't know. Nobody knows. So I would tell you, if you want to kind of get into my mindset, let go as to what we think's going on. Only thing that goes on in my mind, well, here's some potential things. Potential runaway, right? The only thing I'm ever really thinking about is how do I, because it's going to happen, Derek, how do I hedge and protect myself given what my algorithm does when I'm in a scenario on a currency pair? Imagine trying to hedge 5 pairs at once. Your brain wouldn't be able to handle it. There are EAs and bots that you can use for that, but at that point you're like, okay, this is insanity. Trade 1 pair right now because of I would tell you this, trade 1 pair, the OPP feed right now because of the fucking uncertainty. The massive uncertainty. We had random runaway pairs all summer. Pairs that had news on them. Just run away. I could quote all the different random ones. Euro Chief. What do we have? AUD JPY, which ran, 35, 40 some trades deep against us? 1,000 pips, right? It was just absolute insanity. We're looking at the news going, there's no news today. What the hell? And it's just ding, 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 ding. Trade, adding trade, because the market makers were like, let's just move the hell out of this random stuff and take everybody's money, which is fine. I'm not trying to sell you on anything like change your entire trading life to OPP, one profitable pair feed. That's what I'm doing right now. That's what I've decided to do right now. And we will experience it on that test account that I'm showing you. And if you just want to pay attention to the test account and see what it is moving forward, there is no best way other than using my algorithm and playing the game with it. My algorithm takes out 95% of the work, maybe more. That's the whole idea. Mark says, hedging multiple pairs sucks. It does. It's too much. It's overload for your brain because you got to do mathematics on this one and this one and this one. And then the real mathematics on hedging is the fact that you're trying to protect your account. If you have a dozen trades open and you got to hedge, if you have a dozen pairs open, you got to hedge 3 of them. You're wanting to affect and control your margin level percent, and those other pairs that you're not hedged on will be affecting it in different ways. So it's hard to kind of keep track of whether your hedge is protected or not, or whether your hedge is protecting your account enough or not, or what else is going to run away that's not hedged right now. Like, go ahead and open up 20 trades and then hedge every one of them and then try to trade out of that. It's just mind-boggling. But if you're in one pair, it's a little bit different. We will look at this. Derek had brought this up, said we just had some gold. I'll go look at that instead of looking at all the different accounts. Yeah, so we had gold close this morning at 12 seconds after I launched the live, it looks like. And so it made $11.14 for the day. It's done. And this trade went in yesterday just after market open in the evening, the first trade. And then it just kind of went sideways for a while. And then this morning, we had some movement and it closed in profit. And again, this is scalable. So it made $11.14, but you can scale that up. You could bid more than my 0.01 base lot size. So this is the gold scalper feed that's available to all subscribers. So we'll put a lot of focus on the one profitable pair feed. I'll constantly show that test account. And from looking at the data, I just feel as if there are so many reasons to trade it, and that it could and has been and will be more profitable in this current market. And we really don't know what the current market is. It just hasn't been. It went craziness for 90 days. It's been real stable sideways for the last 2 weeks, 3 weeks. Mostly because the kids were going back to school. Imagine that. Kids are going back to school. Parents are getting back to work, coming off of vacations, in August, early September here. So they're gearing up for something, I'm sure. But the level of uncertainty and the level of ease that you will have by trading the one profitable pair feed right now, you can either do it on a demo, switch your live accounts to it, do it on demo, and or watch me demo it. But I am going to, once this current 10 pip hybrid sequence closes, I'm going to move my accounts to the OPP feed and just take a little bit of pressure off of myself, and hopefully, by luck of the roll the dice, I'm going to get a little bit more volume, because it's very potentially possible to be trading that one profitable pair feed where it goes into a trade, profit, ding, out. And then it's looking for the next pair. It might go into trade number 4 in a sequence of 4, immediately goes blue and takes profit. You didn't have the previous 3. So there's a lot of value in doing it, and a lot of reasons why I'll do it. 50% of the reason will just be ease of trading. When I have to hedge, you're going to have to hedge. You got to learn how to hedge. When I have to hedge and I only have one pair open, it's a hell of a lot mentally easier. Hell of a lot mentally easier. And I'm currently testing a commercially available hedging robot that may or may not be something you could use to do some automated management. I've tried a lot of other things. They were not that great. They seemed great at first. I'll just say them out loud and don't use this. It doesn't work very well, but the concept is there. There's and you guys might remember this, on the MQL5 website, there's a robot called AW Recovery. It used to be kind of like my secret thing, but it will literally try to recover your account, and it'll take 90 days to recover a trade. It just takes forever. Mostly because if you even have to recover a trade, you're in a bad one to begin with. Right? And it just henpecks the hell out of it. Hedges and trades and hedges and trades and hedges and trades, and it just henpecks the hell out of it. You need something more aggressive than that, and I'm testing something right now. So, whole other concept of what I'd be teaching. I'd be saying, well, if you need to apply this to your account, you need to have a VPS. You need to have a VPS. You need to be able to install the MetaTrader 4 software on that VPS, that Windows desktop. You need to understand how to install EAs and manage them and all that stuff. I really don't want to get into that because it's just more work than is really worth it. But beware, it's necessarily, it's a possibility. We may look into some of that stuff in the future. I've got more important things to show you guys, other feeds and other automations that we can do. So yeah, stay tuned. I will continually show the results of me trading that OPP feed, the one profitable pair feed, and right now my gut feeling tells me it's the best way to go given the current market. So that's it. Appreciate you watching me on a Monday, September 9th. I will see you tomorrow, Tuesday, September 10th. This morning you'll notice I went live at 11 a.m. Eastern. I'm going to start shooting for that because as I get back out west in the next couple months, that means it's 8 a.m. It will be 8 a.m. for me at 11 a.m. East Coast time. I just feel like that's a good sweet spot of when to go live. Lisa says, OPP makes sense, Terry. OPP, yeah, you know me. If you've heard the song. Yeah, it really does right now. So That's it. Appreciate you guys watching. I will see you in the group, and I'll see you on tomorrow's live session. Talk to you then.
Thank you for joining us on the FOREX Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable FOREX trade.